Joining me now is Dennis Berman. He's managing director and financial advisory at Lazard. He's checking his phone for those deal updates, that advisory work, even as we speak. Dennis, it's really good to see you again.
Great to see you, Callie. Happy New Year.
Happy New Year. So you think the hawkishness about sort of rate hikes right around the corner is a little overdone? Tell me where your optimism comes from.
Well, look, I don't necessarily want to get into directly predicting interest rates and where they're going, but we look at the current sell-off over the past few weeks, Kelly, and even on that basis, if you scroll back on the CNBC screen and look where the stock charts have moved from 2021 into 2022, it's still a relatively minor pullback. I think the bigger concern, perhaps more than interest rates, wherever they may go, is the inflation question as it relates to just the sheer earnings power and earnings leverage inside many of the companies inside the S&P 500 and certainly in tech companies as well, Kelly. So from my perspective, hey, it was an incredible run in 2021 for stocks. Is it going to go down? Yeah. Is there a reason to panic? I would say no.
Okay, you think rates are going to remain low even if they start rising, but we're starting to hear some different tunes out of, Goldman now thinks there's going to need to be 4 rate hikes this year. Bill Dudley writing today says, the former Fed official, says, I have news for those who think the Fed has turned more hawkish on inflation. It has only just begun. So we know from watching markets for a long time, Dennis, that right at the time people are most freaking out is usually when the counter trend starts. It would seem like today would probably be the epitome of that. I mean, how much more can you get after 4 hikes from Goldman and Dudley saying, they're going to have to raise rates to, I don't know what the neutral rate is, 2 or 3% in 18 months? I mean, where do we go from here?
Right. Well, look, I'm not going to make a specific interest rate prediction. I will point out the following, that the economy, as we experience it on a day-to-day basis, as we understand it on an abstract overall basis, Kelly, the economy is somewhat in turmoil. If you look at the absences across the logistics space, if you look at the stoppages across transportation, those are conditions that I do think make it harder, at least in the immediate course, to raise rates. The economy is kind of a mess right now, just simply getting people to work healthy in a way that's necessary for productivity. So at least as it relates in the near term, I think that's one thing that needs to be considered as sort of the year goes on.
Question.
Sure. Right now, a lot of people at home watching us.
Yes. No, absolutely. A question to you on the liquidity front, which does underpin a lot of what's going on. We look at the declines in crypto. We look at the underperformance of the IPO ETF last year and to kick off this year and all the rest of it. What would you say about liquidity and deal flow? What should we expect for 2022? Is this going to result in people pulling back from the markets?
Right. So I will make the general observation, Kelly. The flows, particularly into private equity over the last year, and certainly in the previous 5 years, but really intensified in 2021 and 2022. The capital markets have just a very different flavor than they did certainly prior to the pandemic. The amount of capital that is willing to take an illiquidity, perhaps discount or premium, depending on the situation, I think is objectively higher than ever. Look at the flows into all the major private equity funds, a number of private opportunities in that way. Crypto is its own world, right? It lives by its own set of physics.
Or maybe it's not. It seems to act as if it's part of the high value, high multiple tech world, and it's just behaving the way the rest of them are.
Right. Well, again, this would be another great chart for you to put up on the screen, Kelly. Volatility in crypto versus volatility in tech stocks even. I think they're just totally different animals. So if people are interested in crypto, they just have to live by those different laws of physics. As it relates to the world of capital and stocks and corporate finance, there is certainly more capital than ever. Are there changes around the edges? Yes. Is there any evidence that suggests that capital is currently right now not available? I don't see a lot of it.